To another live stream. Today we're going to talk about Bidenomics and what it means for the price of gold and silver, because I think it will have some significant implications, although it's probably not what you're being told about Bidenomics. And speaking of the price of gold and silver, have had a pretty good move up over the past couple days. Nice little pop in the price of silver yesterday. If you look at the weekly chart from SD Bullion here, you can see that we're hanging tough too, keeping those gains from yesterday. And, whether the price moves up or down in the short term, I do think that in the long term, when we take a look at some of the developments in the economy, in light of this whole Bidenomics thing, probably in the long term going to see higher prices for metals. Surprise, surprise, that is what I forecast is coming. Make sure you check out sdbullion.com, folks, if you're in the market for gold and silver. They are today's video sponsor, and right now, if you're a new customer, you can get gold or silver at spot by visiting sdbullion.com/new. So what is Bidenomics? Well, we had the president put out this video on Twitter the other day where he did a whiteboard presentation on Bidenomics and how they're going to save our economy. Pretty interesting in the beginning here that he talks about this trickle-down economics, and he says that it blows up the deficit. Yeah, notice that. It blew up the deficit. So we're going to get into all of the points that the president touches on in this whiteboard presentation, but let's address that issue of the deficit first. This is the most recent monthly report from the U.S. Treasury. Shows that year-to-date, fiscal year 2023, $1.6 trillion deficit. And, we're not done with the fiscal year. That ends in October. So plenty of room to grow that even further. And then this is a very interesting site. This is something provided by the U.S. Treasury. It's called Debt to the Penny. And you can actually go here to this website and it will tell you the exact U.S. national debt held by the public for every single day. And so I went and looked at this, and this is the most recent data from August 28th. You can see a huge number there. And I went and just looked, and this is just the debt held by the public. It doesn't even count the intergovernmental holdings or anything like that. But just look at this number here. And if you go to a month ago, the data for July, and you do the math and you take the difference between these two numbers, the debt held by the public on July 28th, the debt held by the public on August 28th, and you annualize the rate of the growth of the deficit, or rather the debt, if you annualize that increase, it comes out to about a $2.8 trillion annual deficit. So the largest deficits that we have ever run at any time, except during the pandemic. I believe they did jack up spending enough to increase the deficits to slightly higher than they are now. But keep in mind that ostensibly there's no real emergency going on right now. I mean, of course there's a massive economic crisis that is brewing, but according to the powers that be, the central bankers, the politicians, this is the strongest economy we've ever had. And this presentation by the president, I think that this term Bidenomics, he's trying to latch onto this and say that this is a great thing. It's evidenced by the tremendous economic recovery we've had, how great the economy is doing. But I do think that posterity will look back on this, and Bidenomics will have an air of, I don't know what the right word is, but it'll be demonstrated that this was folly, this rosy view of things, because when you look at this Bidenomics thing through the lens of history, I think from the future, there is a massive economic crisis which is going to, be triggered by the kinds of policies that the powers that be are pursuing right now. Now, it's not all due to Bidenomics, to be fair, but, I had someone leave a comment. I posted something on YouTube about this on the community page, and I was kind of lampooning the president for this Bidenomics thing, and somebody said, well, can't he just blame the previous administration? And to be fair, previous administration didn't do much to help out with the deficit problem. And, this has been a theme among every administration that we've had. They've all run up massive deficits, increased the size of government spending, and they just kind of double down on these policies. But the other administrations weren't getting up in front of us and trying to lecture us about economics on a whiteboard. So I want to talk about these three pillars that President Biden tells us Bidenomics is based on. And I just want to kind of address these claims here real quick and tell you why I don't think that we should have such a rosy outlook of these Bidenomic programs. So the first thing he's got here is smart investments in America. That consists of infrastructure. So basically borrowing more money to build things that, maybe we don't even need, because when the government determines to build a road or a railway, yeah, maybe it's necessary, but when the free market does it, it is. And you end up with things like, the bridge to nowhere, et cetera, with infrastructure spending. And, maybe if you have a huge government surplus, maybe you put some of that into infrastructure, but just running enormous deficits, the biggest deficits on record to employ people building stuff that you don't necessarily need, spending money you don't have to buy things you don't need, not the best plan for the economy. Manufacturing is another component of this. You don't need the government to build manufacturing jobs. If the government is creating manufacturing jobs, they're probably manufacturing things, again, that you don't really need, because when the free market creates manufacturing jobs, guaranteed you need those things because it is profitable, it is a value add. That is why money is made doing them. Whereas, the government, no profit incentive. And then clean energy. And, that's hilarious. Clean energy is the other basis of this pillar, smart investments in America. And you can basically just interpret that as making your energy costs higher. I don't really have anything else to say about that. It's just, again, the government intervening in these markets, and it's going to make inflation a lot worse. The more that we try to move towards these less efficient, more costly forms of quote unquote green energy, which actually cause, more carbon to be created, more economic or environmental destruction, all that stuff. You got to mine all this cobalt and stuff to build the batteries, etc. It's just folly. But the second pillar here is educating and empowering workers. I'm going to try and go through these all quickly, and then we're going to talk about what's driving the rally that we are seeing in the price of gold and silver and how this all is tied into one another. But we've got increasing wages. So I'm not sure exactly how Bidenomics does that. Maybe increasing the minimum wage or something like that. But basically, the only way that you can really increase wages is by making workers more productive. And I don't think anybody is doing anything in the Bidenomics program that is actually going to improve the productivity of American workers. And again, you also got to remember that wages are a cost. Any goods or services that you buy, whoever brings those to market, their wages affect the cost of those. So increasing wages will increase price inflation. No doubt about that, especially if they're artificially increased, not by the workers being made more productive. And more productive workers help to bring down inflation because they're producing more goods and services. But just having workers who make the same amount of goods and services, but artificially paying them more by government fiat, that will not benefit the economy in any real way. I mean, of course, there will be some winners, but as a net, as an aggregate, it's a loss for the economy. Training workers. Yeah, we don't need the government to train workers. If businesses need workers, they will find a way to train them, or if individuals think that it is economically beneficial for them to get trained, they will pursue that. We don't need a bunch of training on jobs that don't necessarily need to be done. Training people to do arbitrary things like what's the classic trope? The underwater basket weaving or something like that. You could train everybody to be the best underwater basket weaver, but that doesn't benefit the economy. You got to have training that the cost of which is offset by increased productivity by the workers. Again, and then the third thing, supporting unions. Also, that's just going to make the price of labor more expensive. And, there's nothing wrong with unions in a free market, workers banding together. But the problem is when the government gets involved and gives them, undue power and a government kind of involvement there, it's just going to drive prices much higher because, again, the price of labor, that's a cost. And costs drive prices up if businesses have to pass those costs on to consumers. The last thing here I think is pretty funny. Promoting competition to lower costs and help small businesses. Ban non-compete agreements is the first thing. And again, that's just restricting entities in the free market from participating in some kind of an agreement. Restricting business, that's not going to have a beneficial effect on the economy. And yeah, maybe after a fashion, banning non-competes will foster competition, but it's always, the unintended costs of these things that you have to watch out for. such as maybe businesses previously, if they're engaging in some activity but a non-compete is essential for them to do that, they can't have the non-compete. Maybe it doesn't make sense for them to participate in that area of the economy anymore, and so likely that will just throw water on the economy, dampen real productive things. You can't limit competition by banning non or increase competition by banning non-competes. One thing that the government could do to increase competition if they really wanted to would be to stop bailing out failing companies, and companies that can't compete, allow them to fail. That would really allow the free market version of competition to do its job and remove inefficient workers from the economy and inefficient actors, businesses that aren't actually adding value, that are just consuming more resources than they put out. They go away, but not when they get bailouts and things like that. So that would probably be the best way. We got a super chat here with a quick question. What does gold confiscation 2.0 look like? So we'll get back to Bidenomics in a moment, but thank you for that super chat, and I'll answer that question for you real quick. To the best of my knowledge, gold confiscation 2.0 probably looks a lot like the first one did, which would be an executive order or some law, and then not much of an active attempt to pursue that. I mean, I think the executive order that Roosevelt signed that banned gold ownership, I think only like one or two people were ever prosecuted under that executive order. A lot of people turned their stuff in. A lot of people probably didn't. And the people who didn't, when gold was re-legalized in the 70s, they benefited from that because, of course, the first time around when the government confiscated all the gold, would they pay like 21 bucks per ounce or something like that? It's not exactly $21, but something like that. And then once they had confiscated it all, they revalued it to $35. So they robbed everybody. They paid them less than the gold was going to be worth at the revaluation. But of course, that's the sort of thing that governments do to increase their own purchasing power and benefit, from confiscating gold. But I don't know. I mean, it's possible that you could have a gold or silver confiscation. I think gold more likely than silver. I mean, I don't think anybody, the number of people who hold silver is so small. More people have gold than silver, I think, especially in any quantity. And I don't know. I mean, I just think that the logistics of a confiscation, it really favors the stackers, the people who are in physical possession of the metal. And I think that, you'll see bank bail-ins and confiscation of deposits, and of course, confiscation of everybody's purchasing power via inflation before you ever see gold confiscation. I'm not saying it can't happen. If there's a hyperinflation, it may very well happen, but there's boating accidents, all these things. So I just, it's not like top of my concern list because the confiscation of your purchasing power via inflation is guaranteed. So that is my thoughts on that. Okay, back to the Bidenomics thing. Yeah, this is a live stream, so anybody has any questions or anything you want me to touch on, feel free to put it in the chat. I do my best to address that. Sometimes I get going on a rant and I don't read the chat always, so you can always repeat your questions as well if you want me to get to those. While we're at it, smash that like button if you're getting some value from this, and don't forget to subscribe to the channel. Okay, so what did we do here? What was the last thing we left off on? Banning non-competes. Oh yeah, lowering prescription drug costs. That's another component of Bidenomics. I don't know how that works exactly. I guess the plan is to drive up the price of prescription medications through onerous regulations on the part of the FDA, and then stealing your money via taxation and inflation and subsidizing those drug purchases, all the while enriching the shareholders of pharmaceutical companies and perpetuating a system of sick care in which people aren't actually encouraged to become healthy. They're just encouraged to become dependent on drugs and the pharmaceutical system. Vic Clementi says, thoughts on burying your gold and silver? I don't know. Make sure you bury it deep enough, I guess. Yeah, caching. I mean, caching. I always say that. I always say caching. I don't think that's correct. I think caching maybe is right. I always get called out on that. Either way, you say it one way or the other. You're going to get called out. But yeah, caching your gold and silver, I don't know. People have been doing that for millennia. I remember reading an account from the Chinese Communist Revolution and how there were some landlords who had buried their silver dollars in the countryside, and a bunch of mobs of peasants surrounded them and like stoned them until they dug them up and gave the stuff over, and then they were summarily executed. So burying your gold and silver not always gonna help that much. Maybe good to have some ready to go in case you need to bug out or take it and go. I got another super chat that said, "Have I heard of the Medicare Negotiations Act?" I have not. So, yeah, I don't know. Silver Commander says 90% silver works out to be $25 an ounce. Yeah, there's premiums on it. Well, no, they've got to be going for more than that right now because the silver price is almost $25 an ounce. If I could get 90% silver for $25 an ounce, I'd buy as much as I could. Let's see. And then the final thing here is cracking down on junk fees. So I guess these are like, overdraft fees, credit card fees, all that stuff. Yeah, I mean, I guess this is not a problem, but this is not something that the government needs to regulate. Competition would be helpful. Consumers can just go with companies that don't hit them with junk fees. And to the extent that junk fees exist out there, sure, they're annoying, but I don't really see this as being one of the biggest threats to our economy at the moment or making any kind of meaningful difference. How about the big junk fee? The line on your pay stub that has money coming out of it for federal income tax and for Social Security. Social Security that, if you're a millennial like me, you're probably never going to see, or at least, you might get it, but it'll be like... Alan Greenspan says, you'll be able to guarantee the benefits, but you won't be able to guarantee their purchasing power. So, to me, that's the real junk fee, and it hits everybody every time you get paid. And, being forced to pay into government Ponzi schemes, that seems like a real junk fee. It pales in comparison to the, $35 overdraft on my checking account or whatever Biden is talking about here. But that's pretty much it for Bidenomics. You can find this video if you want to, throw up in your mouth a little bit on the POTUS Twitter page, and you can watch it. It's about 3 minutes long. I mean, it's worth a watch, I guess, just if you want to cringe again. I do want to go over some of the memes, though, before we talk about the price of silver. Don't worry, I will get to that, but this was pretty funny. So this presentation was pretty darn cringeworthy. And I reposted some funny memes on my Twitter page, which you can see at Stack Smarter. That's my Twitter or X handle, I guess. It's not Twitter anymore. But I thought that this was hilarious. There's just so many memes going around saying about Bidenomics. You got him eating an ice cream cone here over a sea of red in the stock market. I mean, this is basically it. Watching this video, I don't like to pick on people for, physical characteristics or whatever, but I mean, Biden mentally is kind of checked out at this point. You watch this video and you realize that this is something that they had the opportunity to take multiple shots of, as many takes as they want, and this guy can barely get out this Bidenomics message in this pre-recorded video. So I don't know, it doesn't instill a lot of confidence. And I don't like to get too political. Again, it's like both parties are seemingly trying to destroy the dollar. They both get an F on economics from me, but I mean, when you see this presentation, it's hard to say that Biden doesn't get like an F minus. If you can get worse than an F. This is another one I thought was pretty funny. His plan for economics or Bidenomics: increase prices by 200%, drop them by 30%, and take credit. Yeah, he did that too with the, he always does this with saying he added all these jobs. It's like you shut down the economy by government fiat, lay everybody off, and then when people get rehired, when you open it up, you say, oh, look at all these jobs I've created. It's pretty amazing. And then here's some memes I made. I mean, this one is in the thumbnail for this video. I thought, here's my vision for economic future, or I want to share with you my economic vision, just a burning dollar. It's basically what's happening here. And then, I don't know, any South Park fans out there, this is another one I made that I thought this was funny. But again, I'm just a guy who talks about silver. I'm not a comedian or anything. But if you get that South Park reference there, phase 1, debased currency; phase 2, who knows, phase 3, profit. That was one I made. And there's just a ton under the hashtag Bidenomics on Twitter. Very funny. I did think this one got a lot of love from the internet community, because I think everybody knows, whether you're on the right or the left, that this guy is no economic genius. And that even if you support him politically, maybe you say, oh, he's the lesser of two evils. I voted for him. I want to get him in there because the existing guy's so bad. Because, you buy into the whole tribalism thing. Look, I mean, anybody who is participating in this economy knows that it's not in good shape. I think that much is clear. Inflation is running out of control. And you got, Jerome Powell in his Jackson Hole speech kind of saying, like, I don't know what's going on. The economy is still hot. Inflation's still running hot. We jacked up the federal funds rate to 5+%. What's going on? And, meanwhile, again, the government is on track for like a $2 trillion deficit. When you borrow trillions of dollars and spend them into the economy, yeah, it makes things heat up a little bit. It keeps inflation high. This should not be shocking to anybody. You stimulate aggregate demand by running all of these massive deficits. It's usually something the government does in a recession, but obviously stimulating aggregate demand is going to increase inflation, especially at a time when the Fed is trying to cool down the economy, trying to cool down the job market by cranking up rates. So you've got, the job market getting cooler. At the same time, there's all this money floating around. So there's less goods and services being produced because less people are working. And yet still, you have all this money out there chasing the diminishing supply of goods. So yeah, inflation's going to run out of control. I mean, that's the real Bidenomics. This is a story from yesterday about the U.S. labor market losing steam as job openings and resignations declined. And this actually was what drove the move up in the price of gold and silver yesterday. It was this JOLTS report, which measures job openings and the what they call the quit rate. So job openings were down, and the quits rate was dropping as well. So fewer people quitting, which I guess this is interpreted as a sign of a cooling economy by investors. And we're back to that dynamic again, where when you get bad economic news, you see a move up in the price of gold and silver, because the only thing that is driving the markets right now is the anticipation of the Federal Reserve reverting to an easy money policy. And that is why when you get weak economic data, you get the price of gold and silver moving up. And vice versa, if you get strong inflation data, which you would think, it would intuitively, you'd think higher inflation, higher metals prices, but no, because when you see inflation continuing to persist, that means that investors think, oh, the Feds can't cut rates here. But here's the thing. The Fed will probably continue hiking rates, because with all of these massive government deficits, inflation's not cooling down, and hiking rates, I mean, they're working at counter purposes here, right? They're hiking rates to lower inflation, but they're running some of the biggest deficits in history. So one of those things is highly inflationary. The other one, sure, it could fight inflation, but not against the backdrop of this type of deficit spending and money creation, borrowing money out of the future and spending it into the economy today. But eventually what is going to happen here is they're going to continue with the deficits. They'll probably increase them, probably double down. And for two reasons. One, this economy, I mean, with Bidenomics, you got to ask yourself, first of all, if you want to know where the price of gold and silver are going, if you want to know what happens to the gold price in the future, what happens to the silver price in the future, you got to ask yourself, will Bidenomics give us a strong economy, or will we continue to see economic weakness and cooling? Which do you think it will be? Because if you think that Bidenomics is going to create a strong economy, well, then the price of gold and silver may fall. That would be what you would anticipate. But if you continue to get weak economic data, then the price of gold and silver is going to continue moving up, because what's going to happen is that the economy is going to continue to weaken. They're going to continue to crank up rates because they're trying to get this inflation under control. But something's going to break, whether that be the rate on U.S. Treasuries spiking to the moon, and the Fed being forced to intervene and come into the market and buy up all of this debt that we are issuing, because we're selling more debt. That we've got massive deficits, so we're selling more debt out into the market. And it's happening at the same time that countries around the world, the BRICS organization, China, Russia, India, the UAE, they are all dumping the dollar. They're not going to want to buy this debt. We're selling more of it. The Fed is trying to pursue quantitative tightening. They're selling treasuries into the market. So, that's going to cause rates to continue to move up. We have a very weak banking sector here in the U.S. Real estate is going to come under pressure as a result of higher mortgage rates. And something's going to break. probably be the banking sector if I had to bet. But again, I'm not an economist. I'm not a banker. I'm just someone who looks at these numbers and I realize that this is not sustainable. There's no way that they can continue to crank up rates, continue to expand the size of the debt. I mean, the interest payments on the US national debt are approaching $1 trillion annually. You can't do that for very long before something breaks. And very likely, I think what will happen is we're going to continue to see inflation move up. We're going to see inflation spike back up to previous levels. And at the same time, you're going to see rates increasing because rates have to increase in an inflationary environment, or you get a return to real rates that are negative because you have to factor in the rate of inflation against the yield on debt to determine if you have real interest rates or not. It's just not look at one number in isolation. If you've got 5% yield but you have 10% inflation, well, you're losing 5% every year. So the rates are going to have to continue to move up to incentivize investors to come into the market and buy this debt, unless you get the Fed coming in and buying it up, because they don't care if they lose money. I mean, they just can print it up. So they monetize the debt, they return to QE, whatever they're going to call it next time. There will have to be some kind of a major crisis before this happens. I think it's coming. Bidenomics should issue in that crisis in no time at all, if you ask me, doubling down on these failed economic policies. Man, I don't see any chance of an economic recovery while we continue to pursue this type of policy. So it's only a matter of time. And to me, the still very cheap price of gold and silver, it's an opportunity to get in there. You want to also have some cash on hand, because if we get some kind of a major precipitous decline, maybe everything will sell off. There might be some opportunities there. But, you just got to get your financial house in order. Pay off your debt, get some cash, get some hard assets, get some gold and silver, because there's going to be some deals coming. I don't know if it's going to be for those of us holding greenbacks or not. It might be for those of us holding, real money. Hard to say ahead of time. Again, I don't have a crystal ball, but you got to get prepared, because Bidenomics is not going to fix this broken economy. It's just going to make it much worse. And the way that this plays out is that the dollar gets inflated away. Ann Williams says, how can you know the real rate of inflation, when they lie about the CPI? That's a very good question, actually. Because, yeah, it's hard to tell what the real rate of inflation is, right? I think a safe way to do that is you can take the current CPI and you can kind of double it. But also, you got to understand that a lot of people do take the CPI at its face value, and they believe it is an accurate representation. Now, eventually, I think that confidence will be undermined as we see inflation, obviously surpass the official numbers. But for now, investors may act as if there are real rates, even if there aren't, because the CPI is kind of like misinformation out there. Magical Giraffe says it's CPI plus 10. Yeah, I mean, sure, pick your number. Right, I think doubling it, we got headline CPI, most recent number 3.2%. So that would put us at 6.4% if you use my methodology of just doubling it. Is inflation 6.4%? I mean, yeah, that sounds closer. We know core CPI is at 4.7%. So you double that, it's almost 10%. That sounds right. And of course, food and energy are ticking back up. Those are the things that are in the CPI that aren't in the core, is the volatile food and energy. What do we have going on right now? You've got Saudi Arabia continuing production cuts of oil, Russia cutting production of oil, Saudi Arabia joining BRICS in January, very likely, the UAE doing the same thing. So OPEC Plus, they are drawing together, they are drawing the lines between themselves and, the Western nations, the G7. So very likely oil will be moving higher. They want oil to move higher because they sell it. So they make more money the higher the oil price is. And they are deepening their relationship. And also, we've got things like India banning the export of rice. So that is going to also lead to upticks in inflation. And so, inflation is here to stay. Unless we get, significant reforms in this economy, they stop monetizing debt, they stop, all these subsidies, all of the Bidenomics. Inflation's here to stay. And I think that really what we're headed for is a period of stagflation with elevated inflation, but poor economic performance as well. And that is what you get when you run enormous government deficits and crank up rates at the same time. And it's a recipe for stagflation. So that's what's coming. I think the precious metals are a good way to prepare for that. Let me know what you think in the comments down below. What do you think about Bidenomics? Is it going to save us or will it be a problem? If you got a good meme, maybe share that on the community page or on Twitter. Make sure you follow me at Twitter too, at Stack Smarter. I always like to see all of you on there. So thanks for watching, everybody. Don't forget to like, comment, subscribe. Let me know what you think in the comments down below, and I'll catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.